Welcome back, everybody. Thanks for tuning in again. I really appreciate that. And currently, unfortunately, Chinese stocks deeply in the red as I'm recording this video. I will use this video in order to speak a bit about, first the macros and then going into, for example, the recent PDD sell-off. And then, the main topic of this is the earnings season and what we currently see in the EV space. So I'll finish it up also with a bit more focus on that and NIO. And if you like that, please smash a like and share this video so it's getting in front of more people. And I try to make it as short as possible. So now first, what we're seeing currently is generally, I know July and August are weak months with lots or less investor participation. Wall Street is on vacation, so volume tend to be lower. And also we do not have clarity from the Fed whether or not it's going to cut in September and stuff. So I would say pretty many investors are sidelined, and maybe that's not real price discovery yet, but definitely seeing huge weakness in Chinese names and risk assets in general. But let's speak about China, where we have PDD selling off minus 30%. I'm not personally invested in that company, and I'm staying away from e-commerce, but definitely it's a sentiment gauge for Chinese economy and so on. And so it's printing lots of negative headlines, and I would say those headline makers are cherry picking their data usually, and they're finding something negative and with that selling off. But they're shifting narratives from PDD is doing well, which it has done in the past, and growing a lot because the Chinese consumers shifting more to cheaper goods, but now the fear is overwhelming. Despite triple-digit growth year over year in some of the metrics, the weak guidance is what counts for making the fear of investing in PDD now and dragging the whole e-commerce sector, even with Alibaba and so on. And I think it's being kind of currently used as an example to paint this bleak picture about the Chinese economy and making this whole China space suffer a lot. And today the next sector affected with earnings of Li Auto and BYD. I haven't looked into the very specifics, like I haven't listened to the earnings call because I'm personally not invested in these companies due to reasons which I've stated a couple of times here on the channel. But I think that's the main reason why we see also the steep sell-off in many of these EV stocks, including NIO today. And the main topic here, I think, is that BYD is seeing pressure on the vehicle margin, as well as Li Auto, actually, which are pointing out the actual vehicle margin. They are dropping the vehicle margin from 21% year over year to 18.7%, versus also in the last quarter it was at 19.3%. So definitely a drop in the vehicle margin. Just to put it very, very basic, vehicle margin is, you sell a car at a price and then minus everything that it costs you to produce that car, not for marketing and selling, so to produce the actual cost to produce that car, subtract that, and you get your vehicle profit basically, or you can translate that into a vehicle margin. And similar with Pinduoduo, actually, Li Auto is doing just fine, right? It's operationally a good company. They are profitable. Pinduoduo is, all of these companies, including Alibaba and JD and so on, are very sound from a balance sheet perspective. But investors are looking into the future growth, and some of that future growth might be some of the growth in the past might not be translating into future growth anymore. And that's why there's lots of skepticism. And so that's the negativity that they are, reading into this overall sentiment there. And so with Li Auto and BYD saying that their margins, the vehicle margins, not the gross margins, are under pressure, I think that's this testament of this fierce price war and competition in China. And I think that's what's dragging down NIO today, because I think investors are assuming, wait, these companies are making less on each car that they are selling. That's surely going to happen for NIO as well. And stick for the very end of this video, in which I explain why I think this might not be the case. But anyways, for Xpeng, we had also a similar trajectory, which is that also the vehicle margins, which already have been negative, they have been minus 5.7%, meaning it costs Xpeng more to produce the car than actually what they get at the sticker price of the car. That's far different from Li Auto and BYD, and definitely also from NIO. So, it seems to be a general trend there, right? But I would point out here for BYD and Li Auto, without diving even further into the earnings, what I think is the reason for that is Huawei, because Huawei has actually launched a couple of products recently which are actually really similar to Li Auto and BYD cars, which are extended range range extended vehicles that are not real EVs. I spoke about that in my last video, that we need to differentiate between real EV plays like NIO and Xpeng and Tesla versus Li Auto, which is not a real BEV only. Trying to sell some megas, right? But that may actually contribute to some of the decreasing margins there because they need to ramp up and they have not huge volumes on that. And it's by the way, also not a very successful car in terms of sales yet. But again, the main story here is Huawei ramping up cars very similar to BYD cars and Li Autos, and really competing with them. So I think that's a segmental thing about those hybrids, and also about these lower tier cars, which not necessarily translate into what NIO is doing. So now talking about NIO's vehicle margins in the past have suffered, and I think most of that I've been discussing here on the channel was due to a problem with transitioning from the platform NT 1.0 to NT 2.0. That has been completed, and recently we see NIO volumes actually getting higher and higher. This is also what the management has guided towards for the vehicle margin. So NIO in the past had up to 20% and more vehicle margins, meaning they make money on each of the cars that they're selling. That has been declining, but is now backing up again. And they're guiding to consistently double-digit vehicle margins, and actually also growing vehicle margins quarter over quarter. So NIO might be the only one here of those examples that we've been talking in this video, which may actually show a trend of rising vehicle margins. While I think there is some doubt and concern around that, because obviously of this ongoing price war, where NIO also has participated, but not in the same way as the others are doing. NIO is not slashing the sticker price of the cars, but instead they're offering some coupons, some special incentives, and so on. And here's what's interesting. These incentives are not going into the vehicle margin, because the vehicles which they are selling will still be at the same cost, or possibly lower cost per unit in the future, because they have now higher volumes, which increases the economies of scale. So it's likely actually that their vehicle margin might be getting higher, while it's possible that there will be some depression of the gross margin in terms of that they had to spend marketing incentives in order to get these cars out. But the vehicle margin might be fine. And I think that's contrary to what the algorithms or investors out there are, which have not a deep view, are assuming about NIO earnings. But also even for the gross margin, I'm not sure how much this will actually weigh on the margins that they're doing these incentives, because for one, the volumes are higher, so that may actually weigh in. Plus, we have seen a slower build out of the battery swap stations for now, because they're also transitioning to another generation there, and they're now trying to make their partners pay for the swap stations instead of only investing by themselves. So we had a slowdown in that. Maybe that equals some of the necessary investment which they had in order to provide some incentives for buyers, which has now ended. And currently we still see kind of fine sales in the weeklies. We'll see how that will end up in the monthlies. But as I said, it can fluctuate. It's possible month to month if we get some setbacks from now and then. But overall, the vehicle margin story might really not be the same as with these other competitors, but I think the algorithms and the investors today treating it like that. Again, there are question marks around that. I've tried to explain that, and I think also in general people are staying away from NIO currently because we had the CFO change. The people want to see the numbers first, they don't trust it. And yeah, that's it. That's the situation where we're currently in. I think I didn't forget something. So Thanks for watching. Please like it and see you in my next video.